Welcome, everybody. Welcome to TakeStock Live. Every Wednesday, 15 minutes after market close. We're well into the second season now, running every Wednesday into October. This week, we've got companies from Sterling Merchant Capital. Thank you very much, Sam Greer, President of Sterling Merchant Capital, which is a Calgary-based investor relations company founded in 2005, for presenting two companies that you'll be viewing shortly. Next week, just so you know, we have two companies coming back, MMAT, Meta Materials, and MGRO, Musgrow Biologics. Look forward to them. At this point, we would like to thank the TMX Group and the TSX Venture Exchange, our event partner, for helping us keep the conversation between companies and investors going in these very unusual times. We'd also like to recognize the vital support provided by our sponsors, Baskin, MNP, Leigh Jones Gable, Olympia Trust, and the CSE, who helped launch Reforum back in 2014. We'd also like to thank our extended network of supporters for helping us make this show happen. Thank you to Calgary Meg and CIM. Thank you to the Manitoba, Saskatchewan prospectors and developers. And a special thank you to Investmentpitch Media and the Newswire for helping get the message out. Getting down to business, welcome everyone, all of you, our attendees and guest presenters. Note our disclaimer. This presentation is for information only and is not a solicitation to buy or sell stock. Companies pay fees to present at TakeStock, and TakeStock and its principals, Raj Joshi and Mark Francis, may have equity investments in companies we invite to present, may consult with the companies, and make no representation or other recommendation in regards to these presenting or any other companies. You should do your due diligence and seek professional investment advice. Some housekeeping matters also for attendees. You'll note up above there a red button on your screen. If you lose audio, just click it and you will be reconnected. Normally we run just under 45 minutes. The chat board is active this show, so feel free to type in any questions and we will, our moderator will utilize them. Please be clear about to whom your question is addressed. Each company will give a presentation followed by a panel discussion with Q&A, which is moderated by Alan Turner of Calgary Mineral Exploration Group, Calgary Meg. We encourage you to connect with the companies directly in order to get detailed information. Their contact details will be available at the end of the show on the screen. So as I mentioned, today are two companies presenting in association with Sterling Capital. I'll call upon Sam Greer to take it away. Hi, Sam.
Hi, Raj. Raj, thanks again for having me here. It's once again a real pleasure. Today we've got two companies we quite like at Sterling, Deklar Resources and tracesafe. As a bit of quick background, as many of you may know, Deklar Resources is an independent international oil and gas company focused on low-risk appraisal and development opportunities in the prolific West Africa region. Deklar also has a well-proven management team that has significant experience in Africa, particularly Nigeria. Our second presentation is tracesafe, which is a medical technology company uniquely positioned to help end the COVID threat. They have a full suite of real-time location management services and contact tracing solutions enabled through advanced low-power Bluetooth beacons and enterprise cloud management. Giving the Deklar presentation is going to be the CEO, Duncan Blount, and also leading the Deklar presentation is going to be Sami Famidi. As a bit of background, Duncan has over 12 years of experience focused on the natural resources sector. He was previously head of emerging and frontier market commodities at RWC Partners, where he was responsible for developing their commodity and natural resource portfolio strategy. He holds a BA in language at the World Trade from Stanford University and an MBA from the Thunderbird School of Global Management. Also leading the Deklar presentation is Sami Famidi. Sami has over 20 years of experience focused on structuring natural resources and infrastructure transactions in West Africa. He is a former strategic advisor and subsequently head business development of Leak Oil Limited. In addition, Sami has held executive positions at FBN Capital and Minecore Resources. He has a Bachelor of Science degree in Chemical Engineering from the University of Lagos and a Master's degree of Science in Applied Environmental Economics from the Imperial College of London. Leading the tracesafe technology is Wayne Lloyd. Wayne has a CFA designation, but is also an entrepreneur at heart. As a technology executive with extensive capital market experience, Wade has raised millions of dollars in capital to support profitable businesses and successfully attracted world-class talent to the ventures he is involved with. His expertise ranges from scaling startups, special situations investing, and leading complex tech mergers and acquisitions. Gentlemen, great to have you here. Duncan and Sami are going to lead the first presentation, as I previously mentioned. Duncan, please take it away. Thanks.
Perfect. Thanks, Sam. Thanks for that intro. And there we go. All right. I'm going to be talking about Deklar Resources today. As Sam said, we're an independent oil and gas exploration production company focused on West Africa. There's the disclaimer. You can read that later. Company overview. In terms of our asset, we're currently focused on Nigeria exclusively at the moment, thanks to a recent acquisition that we closed back in July for a private company called Deklar Petroleum Limited. Deklar had a sole asset, which is a risk service agreement with local company Millennium Oil and Gas Company Limited on the Oza oil field in oil mining lease 11 in the eastern Niger Delta. It's onshore, proven oil field. The asset used to be owned by Shell Petroleum. Back in the 50s, 60s, 70s, they did some test wells, but never entered into commercial production. OML 11, the block where this asset is operated by Shell Petroleum Development Company, the local subsidiary of Royal Dutch Shell. They also operate the Trans-Niger Pipeline and the Bonny Export Terminal, which are both located on that block. So there's excellent infrastructure in place and on site. In exchange, as part of that risk service agreement that we have on the Oza field, in exchange for technical and financial support, we're entitled to 80% of the economic interest before cost recovery. And that figure slides down to about 40% based on production once we hit cumulative 10 million barrels of production. In terms of funding, we're well positioned for growth with this one asset. We've got a financing package that we're finalizing over the next 30 days or so that we'll go into detail on that, but that will help us reestablish production and drill some reentry wells as well as some sidetracks as well. Based on the capital that's already been spent on the asset, there's about 45-50 million that's already been spent on surface infrastructure, so it's ready to go with a short term to production once we get the drill turning. In terms of the management team, we've got a great management team. Sam went into some of that. We've got a board and management that not only have deep experience in oil and gas, but specific experience in Nigeria, which is a very valuable thing. And then looking into growth opportunities, we're currently evaluating other proven marginal fields for potential acquisition or other partnerships. The location of the field itself, as I mentioned, it's onshore in OML 11. You see on the field or on the map right there, circled in the yellow. Towards the north, you see Oza, operated by Millennium Oil and Gas, or owned by Millennium Oil and Gas. So that's the field. And as you see, all those other green splotches are proven oil fields. So it's very much a proven hydrocarbon region that we're working on. The concession itself covers 20 square miles, and it was carved out of OML 11 back in 2003 when the Nigerian government put in place the Marginal Field Development Program. This was done to help stimulate a local industry, and Millennium, which is our partner, they were one of the companies that was allocated the asset. You see other fields, they're producing fields nearby, largely operated by Shell. Some of those are Isimiri, Afam, and Umasoi. The wells on OZA, you'll see the pictures later. There's infrastructure in place. Some of the well tests that were previously done by Shell, they produced over 1 million barrels cumulatively, and the well tests on 2 of the wells were producing about 2,000 barrels per day. So pretty good production rates, and it gives us good visibility on what this field might look like. Early production, there's infrastructure in place for that. Early production facility that can be upgraded in a subsequent phases once we get to production reestablished. The structure of the field itself, you see those images there. It's a classic 12 zone stack sand reservoir. So it's conventional vertical drilling. We can also do some horizontal sidetracks and development wells, but it's non-fracking. It's a conventional oil and gas asset. You see there on the right the OZA field structure, which highlights some of the low risk appraisal and development targets that we're looking at. In terms of our development plan, we've broken it down into 2 initial phases. Phase 1, which we're already working on in some form or fashion, we're going to re-enter OZA 1, the existing field, and also look at drilling a horizontal development well from a slight step out on the same well pad. Low cost field, the payout, thanks to the tax structure and the nature of the field, is pretty accelerated. 25 days roughly from the time we start drilling the well to completion. And thanks again to the infrastructure in place, that means that production can be brought online pretty quickly, given the infrastructure and the facilities that are in place. And as we increase production beyond that capacity, as I'd mentioned, we can increase the capacity of those assets. As we come out of phase 2, or come out of phase 1, we get into phase 2, which we anticipate taking place about 12 to 18 months from now. That'll entail 4 to 5 new development drills and other wells that'll be drilled on the same field, different sands, about every 60 days or so, and those can be tapped into the infrastructure that's there. Here's some pictures of some of the infrastructure that's in place on site. You see the separators and the generators already there. Here's the wellheads, 1, 2, and 3, as well as the manifold and pipeline launcher, in good condition there. And here's some of the later equipment that was put in place in the past few years. The tie-in point to the Trans-Niger pipeline, which is, I believe, the biggest pipeline on the African continent. So it's nice to have that at our doorstep. Also, the LACT unit that helps meter the flow of the oil from our field into Shell's pipeline. And I'm going to hand it off to my colleague, Sanmi, who's the MD of our local subsidiary, Deklar Petroleum, and he'll talk about the industry as well as the financial structure.
Yeah, thanks, Duncan. So Nigeria is the largest oil and gas reserve, has the largest reserve base in sub-Saharan Africa. Current average production is about 2 million barrels per day. There's an initiative to actually double that. We'll go into that in detail as I talk about the marginal field. Only a third of the 1,000 fields that have been discovered have been brought into production. So there's a lot of opportunities there. The country benefits from long-standing presence of the large international oil and gas companies and independents. As Duncan mentioned earlier, the fiscal regime is attractive. The crude is of good quality and is of the light crude type. There's established infrastructure for oil and gas production, for transportation and for export. So the pipeline you also described earlier is one of those. There's also a well-established energy services sector, specialty equipment and skilled personnel. So there's a deep specialist pool in the country. So the marginal field round was launched in 2001. An odd 130 fields were identified. Out of that, 24 fields were put into the first basket. So OZA field that we've entered into an RSA on is one of such fields. There's a second phase going on presently. That has 57 fields on offer. As a matter of fact, the technical and financial bids closed a couple of weeks ago. We expect results third week to last week of October. In the round, according to the program, the marginal field is described or defined as an asset that has not been brought into production or has remained unproducing for 10 years, either because the economics don't work given the low production if you apply the historical royalty and tax, or because the IOCs have just not done anything about it. So of the 57 fields, Deklar, alongside partners, looked at over 10. So some of the fields are on this slide. There are 6 of them on this slide. So recoverable reserves range from 10 to as high as 80. This slide sort of focuses on a case study. So the Umusadege field is one of the marginal fields that was allotted in the first phase. As you can see, when at close of bid, the reserve 2P reserve number was 3 million barrels. That was 2003. Today, the reserve size is 85. On the right, the chart shows the production. Production also significantly ramped up and stayed close to the 20s or just a few thousand barrels shy of that. The fiscal merits, the marginal field framework, one of the key levers as described earlier was to have the royalty be low when you're producing when there's low production. So it's structured as a sliding scale. So for the sort of low production, you're only paying say 5, 7, or 10% royalty, as against historically paying 20%. The round also, the framework also allows you benefit from a low tax, a petroleum profit tax for the first 5 years. So you're paying 67.75% as against 85%. So you enjoy a startup tax. Over and beyond that, the framework allows producers commingle production, and the benefit of that is obvious. You get higher production per well, and also lower footprints and lower cost. And on the RSA economics, so for providing funding for capital expenditure, Deklar enjoys 80% of the distributable funds as cost oil for recovery. After cost recovery, Deklar's profit share is based on a sliding scale as detailed. So it is 80% of the distributable profit when production is under 2.5 million barrels. Beyond that, between 2.5 and 5 million barrels, 70%. So it goes down the scale as described in there. As mentioned by Duncan earlier, a very important milestone is the recently announced financing, where Deklar entered into term sheets for preliminary funding of up to $26 million to restart the production. The first funding is from Sanlian, that's committed $15 million for the first tranche, is 7.5 for the purchase of 15% of the share capital of Deklar Petroleum. That's the local subsidiary of Deklar. The second funding is from an international oil crude trader of $50 million US. Net of that is 11 for the field developments, where 4 goes to bring down the historical debt. We anticipate drawdown in 30 days, and the funding would bring production following drawdown in 3 to 4 months. We work very closely with the local community, indigenous partnerships. Where possible, we work with the locals for civils, for construction of facilities. We provide employment and training, and we treat the local communities as stakeholders to ensure security and sustainability. At this point, I'll hand it over to Duncan. Thank you.
Thanks, Sammy. So in terms of the near-term value drivers, it's a pretty catalyst-rich story, as you've heard. Focusing first and most near-term on finalizing that financing that will allow us to re-enter and recomplete OZA 1, the first field, or the first well that we plan to re-enter to reestablish production. And we'll follow that almost immediately with a horizontal well also at OZA 1, followed by re-entry at some of the other wells. Overall, based on the nature of this field, plus the advantageous tax structure that Sanmi went over, it gives us a fairly low cost and accelerated payout and reduced risk thanks to the asset and the tax structure. In terms of the time for drilling each well, it's about 25 days, so not a lot of service intensity on that front. And you know, as Sanmi had talked about, the service space for oil and gas in Nigeria is very well developed and well established. So we plan on taking advantage of that. Infrastructure is already largely in place with production facilities and export pipelines already there. A lot of the surface infrastructure specifically at the OZA field is also in place thanks to prior investments made by our partners. All of these facilities, as we scale up production and start to reach capacity, we have the option to increase capacity and contribute to you know, increasingly large production numbers. Overall, in terms of the development plan, we're looking at 4 to 5 development wells, including some horizontal wells that are really just step-out wells from the initial fields. Looking at other assets as well that Sanmi went over in detail, other marginal fields that we can basically use largely the same structure and strategy to get those back into production as well. In terms of our management, you see here our board of directors led by Chris Castle, who has he's been with the company even in our prior history before we acquired this asset. We used to have a nickel mine in Vietnam. Chris was my chairman there as well, so he's got good experience with oil and gas and mining. Alan Labie, excellent technical experience. Norm, very good accounting and financial experience, and Paula Kember, my CFO and corporate secretary, who has deep experience in the capital markets and as a CFO previously. The management team led by Sanmi in Nigeria, David supporting him on the finance side, Zach Malone and ops, and David on completion and drilling. So we see we have not only do we have a team that can manage the company at the listed company level in Toronto, but a team that can manage the operations on the ground in Nigeria. Capital structure there, you see a summary of the acquisition on the right, and fully diluted shares outstanding, right about 70 million shares, including a milestone payment once we've established production. And there you see our offices based in Toronto, listed TSXV, the ticker is DKL_CN, and we also have presence in Nigeria and a technical office in Dubai. So we'll save some questions for later, but thank you, Sam, and all you participants for your time and
Great. Duncan, thank you very much. That was, and Sammy as well. That was a great overview. And Sammy, thanks for calling in from overseas as well. Great to have you both here. We're going to start the second presentation in about 1 minute. We're just waiting to upload the next presentation. For those of you who have just logged in, I'm just going to give a quick overview of TraceSafe again for those of you who just logged on. Our second company, TraceSafe, is a medical technology company that's uniquely focused to help end the COVID threat. They have a full suite of real-time location management services and contact tracing solution that is enabled through advanced low-power Bluetooth beacons and enterprise cloud management. Oh, looks like we've got it right here. So anyway, our second presenter, Wayne Lloyd. Wayne, it's really great to have you here. Please tell us about TraceSafe.
Yeah, hi, Sam. Thanks so much for having me. Appreciate it. And thanks, everyone, for taking time out of their afternoon to come along here. So TraceSafe is a quick introduction. Established in 2013, started out primarily as a medical services company. The first business they entered was infant tracking in maternity wards, effectively putting a hospital bracelet on infants as they're born and tracking them through the hospital, making sure nobody gets misplaced or switched or any of those sort of things. And it's effectively just a hospital bracelet with a Bluetooth chipset in it and a small battery. So there's a really good track record of highly technical implementation, a high safety implementation, and stellar privacy. Having to integrate with some of the top hospitals, access and control systems, as well as dealing with patient records, really built a solid platform. 90 people in the team spread out between California, India, and Canada. Our major customers, when we acquired the company, this TraceSafe was running the quarantine management solution inside of Hong Kong, alongside the Hong Kong government. Since then, they've added a $10 billion Southeast Asian conglomerate as a recurring revenue customer, selling into governments in that region, as well as major construction, billion-dollar construction firms in the Southeast Asia region. The team here consists of myself, Dennis Kwan, and Suresh Sigamsetti. Dennis and Suresh came along with the acquisition company, pioneers in the Bluetooth sector, really involved in some of the earliest startups and some very successful exits in that world. As Bluetooth becomes more and more important, their expertise are quite in demand, so we're very lucky to have them. Gord Zylstra is our Chief Revenue Officer. Gord's quite an interesting story because this is really a mature technology building around a global sales rollout strategy. And Gord comes to us, originally employee number 15 at monster.com, sort of overseeing the transition from all paper newspapers to the online world and rolling that business out globally. That ended up becoming a multi-billion-dollar company. He went to an HR tech company, or now they're calling human capital, which was called Taleo. Taleo, he led growth there, sales growth internationally. Taleo was acquired by Oracle for $2.6 billion. And then he subsequently went to SuccessFactors, where he had, again, led global growth, or was early on in the growth of that organization. And that was bought by SAP for $2 billion. So great track record, Gord, rolling out innovative products, pushing into a corporate human resources function and, seeing massive growth. So very lucky to have a unique team perfectly suited to sort of attack this challenge. The company has two products. One is I Am Safe, which is quarantine management. This is strictly sold into governments and used to enforce quarantine compliance for returning travelers, community quarantine, and so on. It's effectively a wristband. It looks like a hospital wristband. You put it on your wrist. You either pair it with a cell phone or you pair it with one of our gateways, depending on the implementation. It implicitly tracks your location. There's GPS built into it. And it's a single form factor. So it's just the wristband. It's really a one-trick pony. This is the first major product, the first major rollout. And the second product is called AllSafe. It's a contact tracing solution, exposure notification system. This is used a lot more for companies. There is no location tracking, meaning there's no GPS built in. This is a really privacy-focused product. It's strictly to notify workers if they come into contact with someone who contracted COVID-19 or some other communicable disease. It's particularly applicable in environments like remote workers, places where people are going out to remote locations, or for busy factories, manufacturing facilities, or large corporate offices. There's multiple form factors. This is something that can go onto a lanyard, a hard hat, or a different wristband function, more like a Fitbit. So those are the two main products. We're seeing most of our growth right now coming from the contact tracing side of the business. The platform works like this. There's three pieces of the platform. There's the TraceSafe cloud platform, and this is the sort of mature cloud product that I was talking about, developed for hospital use and others. And then we have our wearables category, which is the wristband, the clip, the siren. The siren gets used for the hard hats in construction sites and other places. And then we have our gateways, and the gateways are used to either suck up the data that's on the wristbands themselves to go up to the cloud as a device to cloud part of that journey, or they are the LTE GPS gateways that are shipped with the wristband for our government clients. There's a lot of countries that don't want to have, their citizens don't want to have their wristband necessarily paired to their cell phones. A lot of private data on your cell phone. So we give them a gateway so that the process never touches one of their personal devices. So that's becoming increasingly popular. We see this as a $60 billion opportunity, the global safety tech market. We're working a lot with Lloyd, and this comes from one of their white papers. You can take a look at it. Really, the safety tech and the connected worker marketplace are really converging. The large IoT integrators, telcos, and multinational companies really driving towards a connected worker platform. And the pandemic has only increased the need for scalable safety tech solutions, wearable solutions. TraceSafe is really the obvious entry point, and we have massive interest from many companies, partnerships that we've implemented already, and many in the pipeline. So the bottom line here is, we have demonstrated the ability to execute on a global scale, delivering hundreds of thousands of wristbands successfully to ultra demanding government clients on government tenders. We're one of the biggest wearable companies in the world by number of deployed devices. The opportunity is really 3 times bigger than we thought when we first got into this business, because now we're seeing this massive safety tech and connected worker opportunity that we're a core part of. And really the timing is now. We have this catalyst with COVID-19, and companies, countries, our customers are very open and willing to move forward. So our product has moved through many phases, kind of starting with an idea, developing the platform, deploying as an infant tracking product, right up until our breakout customer in Hong Kong as COVID-19 was first emerging in January in China. And now we have taken that breakout customer and deployed to many governments and many corporates. And so we have this confluence of the healthcare industry, the government industry, and the corporates. And this is really pushing us into a massive SaaS model, which is software as a service, where we're not necessarily selling hardware for the sake of our revenue and bottom line, but we're more transitioning to selling subscriptions to our service. Moving to a gateway style product away from a cell phone paired product has made a huge impact to our bottom line. Our average selling price is almost 10x. So we've gone from selling $5 bracelets a piece to selling a bracelet plus gateway for up to $50. So the cost has gone up, but the average selling price has gone up as well. And that means revenue and net income are going up. As we move through our business growth, right now hardware is a major part of our revenues, probably up to 80% of our revenues. But as we get more mature and it's really a land grab getting these wearables deployed, we expect our software revenue to dramatically outpace our hardware revenue over time, to the point where we're receiving most of our revenue from recurring software subscriptions. We expect that most of the hardware is just going to become commoditized over time. So our 90-day plan going forward here is really we've deployed successfully in hospitals, construction sites, governments, and we're moving into large-scale enterprise and office, travel and hospitality, particularly in cruise ships, manufacturing and factories, as well as stadiums. It's a massive opportunity and an ultra fast-growing company. I can tell you we're set to report our quarterly earnings very soon. We expect it to be somewhere in the range of double what we've done before. We see a growth trajectory that looks like roughly doubling quarter over quarter type pace. So we're effectively in a hyperscale, hyper growth business trajectory, and so that's effectively the whole story. So really appreciate the opportunity to come on and talk about the company. And our ticker is TSF on the CSE. Very small float. There's about 35 million shares outstanding. Very tight, and based on our traction in the market and all the other factors I've listed out here, hopefully a very compelling growth story based on our market cap.
Wayne, thanks very much for a really great overview. And at this point in time, well, firstly, thanks to all three presenters for giving us a great story here. At this point in time, I'd like to introduce to the panel Al Turner. Al Turner is a professional geologist with Stantec and is also the president of the Calgary chapter of the Mineral Exploration Group. Al, welcome to the panel. Great to have you here. And by the way, I've got some good news for us, Al.
What's up, Sam?
He's going to be able to extend our Q&A period past 3 o'clock. So,
okay. That sounds great. Thank you. So Wayne, starting off, a question for you. Are there other companies competing in the health and safety wearables market? And how are you differentiating your company from your competitors and securing the market share?
Yeah, thanks for the question. So I think there's quite a few competitors. I would say there's not really a lot of material competition at the government and kind of high-end enterprise market. Selling into the Global 1000 is a bit of a tougher operation and a different animal than most of the companies that are sort of small startups are used to dealing with. Gord Zylstra, our Chief Revenue Officer, selling SAP and Oracle into these companies for 2+ decades. So he really has a good handle on selling into that. As far as like named competitors, I would say that Hitachi, major conglomerate, has a wearable safety tech business. They're probably the company we see most in the marketplace, and they are they're our closest competitor. But again, they're a large conglomerate with many focuses, and we are a very focused company, just strictly around one core business area. So we probably tend to win more of the tenders and contracts when we go head to head with Hitachi than they do.
Great, thanks, Wayne. Duncan and Sammy, question for you also. With uncertainties due to the fluctuations of the price of oil, can you explain to us the advantages of investing in African oil development rather than the North American market?
Sure. I think first off, the nature of the assets is one of the biggest differentiating factors. What we have is conventional oil. Like I said in the presentation, it's vertical drilling. The wells cost about $2.5 to $3 million each, and it's a long life asset. So relative to North American assets, which are largely shale and conventional projects, where you might have a good increase in production on the front end, but they're short cycle assets, short duration assets, very capex intensive. Means the costs are higher. You're depending on the basin, but your average costs in the U.S. are anywhere between $40 and $60, and that's not even counting some of the financing costs that a lot of these companies have, particularly the public companies. Our field, we're making money into the 30s in oil price, as our production costs are around $15 to $20 a barrel. So from that aspect, I think it's superior to the U.S. fields as well, or some of the U.S. plays, or even Canadian plays, and for largely comparable oil. Oil in Nigeria is light to medium grade, similar to the U.S., which is benchmarked to West Texas Intermediate. So it's light sweet crude. Sammy, I don't know if you have anything else you'd like to add to that.
Yeah, and also for the marginal fields, they're actually located very close to existing infrastructure. So when you bring them online, you can very quickly plug into nearby evacuation systems. Some of these are owned by the IOCs.
Okay, excellent. Thank you both. Wayne, question for you. How will TraceSafe adapt when the demand for quarantine management and social distancing enforcements are no longer necessary for the COVID-19 pandemic?
That's a great question. So really, we plug directly into the connected worker initiatives that have been happening for the last 3-5 years. These are initiatives that help employers understand what's going on with their employee base. How many people are deployed to a site. Where they're spending their time. The resources that are being used, and so on. This is an area that there's sort of like these little corners of the market where if you're not a local and don't really understand them, like human resources, you wouldn't really know that the HR department at your work has sprouted like 6 NYSE $10 billion companies, but it's a massive industry. And so the HR tech world is just staggeringly large, and the need for solutions around safety tech, just for the fact that people have a lot of scar tissue, office workers, people like that are reluctant to come back to work. This is a very visible, easy to implement, affordable way for an employer to show that they care about their workers and they want to bring them back in a safe way. After large scale kind of societal level trauma, like 9/11, other things, there tends to be systems put into place that have long-lasting effects. And I think that all the stuff that you see with commercial real estate kind of taking a hit and everything, I mean, there's a lot of vested interests that have a skin in the game to get people back to work and find solutions to get them back there. We're one of those solutions, and we connect directly into a larger initiative that has nothing to do with pandemic, for the future. But I see this as being a couple-year kind of trend, and something that we're perfectly positioned to capture.
Okay, thank you, Wayne. Duncan and Sammy, excuse me. In May of 2019, Forbes magazine contended that Nigeria, with its 40 billion barrels of proven oil reserve and the largest GDP in Africa, has a challenging business environment. I guess the first question is this Deklar's experience in Nigeria? And the second question is, what plans has Deklar put in place to deal with potential risks associated with government policy changes?
Deklar has been very deliberate in the asset it goes for. So one of the slides that was in the presentation actually spoke about the Umusadege field. So Umusadege was a marginal field that when it was acquired, it was well less than 5 million barrels. Today is about 85 million barrels. So what we've seen is for the marginal fields, there are always positive surprises. And the reason is that it's the definition marginal often doesn't apply to all the assets. What often happens is some of the assets that are held by the IOCs are not developed because of the sort of budget constraints and ranking. So if you have a portfolio that has assets that could potentially produce 200,000 or 100,000 barrels per day, naturally cash will follow those assets, right? The next best assets that are going to do 10, 20,000 barrels per day will be ignored. So what we found out over the years is that the assets that come into the basket are not actually marginal from the economics point of view, but on a ranking basis, when we look at it from an IOC's perspective. So the assets we go for are very attractive assets. As Duncan described, they are simple assets. They are discoveries, so they are fast cash generating assets, because for the first phase, it's usual that we do a re-entry, and it's a very simple sort of development approach. We hook up to existing facilities, so the cost to bringing it online is actually lower than most projects, even in Nigeria. So it's like comparing apples and oranges when you're looking at the marginal field vis-a-vis the large IOC JV asset. So all that, and also the understanding of the Niger Delta itself has really helped us.
Duncan,
And I
do you
think
want to
also,
add to that?
yeah, just adding to that also, what we have too, from an operational perspective, Sammy went into some of the advantages that we have that show that it's not necessarily as risky as some might think, but also the team that we have in place. I mean, myself, I've prior to being on the corporate side, I was an investor and invested fairly sizable amounts with a lot of the earlier stage oil and gas companies in Nigeria. So we have experience. We have Sanmi leading the team on the ground, so we have local presence. So we're able to take the experience that we've gained internationally as well as across West Africa and Nigeria and blend it with the Deklar team from the company that we've acquired and put that together into what we have as a very robust team. And in terms of kind of, looking out for government actions and things like that, I think the fact that we're building this company right now is an advantage for us. I mean, we're doing this because of the opportunity that we had, but also from an investor's perspective, it's a great time to get into Nigeria, and it's a great time to start producing oil and gas. So locally in Nigeria, they're looking to roll out. I mean, we're in the middle of a bid round right now because they're trying to promote this industry. So we're there, ready and able to participate. They're also talking more about boosting the gas market locally, so that natural gas is a clean local source of fuel. Right now, they flare almost all of it. So that's another market that we're looking to take advantage of. So the dynamics in Nigeria are playing to our benefit more than anything.
Okay, thank you. Wayne, with the number of breakouts occurring in hospitals, and a local kind of example of that here in Calgary is the Foothills Hospital in Calgary that got hit, I think, last week. Are you seeing hospital administration putting this technology to use beyond the kind of the baby trackers that you started your company with?
Yeah, so we have two projects we're actively working on right now. A pilot project in Senking Hospital in Singapore, and we have a large chain of private hospitals in the US that are using the product. There's actually a lot of them are not looking to it for as much of patient outbreaks or outbreaks inside the hospital. I mean, these are places, these are medical places. They're used to dealing with infectious diseases. Tuberculosis patients come in all the time. They have precautions internally, but they're looking at it for mostly as their HR, their nurses and doctors and people to actually sort of check in to work in a fast and efficient way and get on with the business of taking care of patients. I would say we don't have a massive applicability from a pandemic response perspective inside the hospital, but more, working with the hospital workers themselves and getting them in to work efficiently. Right now, for example, one hospital we're working with in Texas, the people are lining up, the actual nurses and doctors are lining up sometimes 30 minutes to an hour just to check in and get into work. So that's obviously an untenable situation, and that's an area where we really help.
Okay, thank you. Duncan and Sammy, this one actually is I'm going to deviate a little bit from my previous topic questions and go to something I was reading on the website. On your website, there's a review of the Holt property, which is a volcanogenic massive sulfide style deposit that is located in the south end of the Vancouver Island, BC. With the uptick in gold and silver prices these days, are there plans to advance the Holt property? I think what I was seeing, the update was 2018 on the website. Just curious what the thoughts are.
Sure, we picked up that it's an option on an earn-in option on the property. We picked that up when we were exiting Vietnam. I'd mentioned we sold the nickel cobalt mine in Vietnam and cleaned up the company and looked for a new asset. That was one that we'd done some initial due diligence on, and redid a 43-101 and things like that, but have since allocated time and capital away from that. So very, very unlikely that we do anything further on that project. Our focus is pretty clearly shifted towards Nigeria, oil and gas, and frankly, these marginal fields.
Okay, great. Thank you. Wayne, can the technology be adapted to a different use? And some of the examples, just kind of brainstorming. For example, instead of social distance enforcement, could the sensor be attached to, or basically used in detecting toxicity in environments, radiation, etc.? Are there other plans to expand?
Yeah, definitely. I mean, I think at this point, no real immediate need. We see the market very healthy for kind of pandemic-related social distancing type technologies. But just to sort of give a quick example, in Hong Kong on the tendering scale, they basically give you a score based on how accurate your device is, based on versus how much the device weighs. So right now our device weighs somewhere in the neighborhood of like 7 grams, and so a lot of the technology and effort that our embedded systems engineers, our firmware team, and our cloud team are focused on is really the efficiency of the chips and getting them so that they can work, produce accurate, super accurate results with very little power consumption and very little weight. So reducing the size of the battery, increasing the efficiency of the chip, and reducing the size of the form factor. The whole idea being you want to forget the idea that you're wearing something. Workplace kind of wearables can be a bit annoying. So the idea is to get the user to sort of forget that they're wearing it at all and have it just be a part of their kit. In a safety instance, this would be something mounted to the inside of their hard hat, or something sort of sewn into their safety vest. But to your point, there's really limitless opportunities. This company is at the cutting edge of the technical breakthroughs in this chip and sort of efficiency and accuracy. So we're really pushing the envelope of all of the different applications we could go towards. And the world is totally open as far as where we pursue next. It's very exciting.
Okay, thank you. And maybe I'll wrap up with the last question here for Duncan and Sammy. And you mentioned in your presentation the partnerships with local communities. Are your employment training programs aimed towards creating technical and lasting knowledge, or are the available opportunities more on the menial side?
No, not more on the former, actually. So the sort of partnerships we have, currently we're working on the civils, and the contractors are actually local from the community. So around the Niger Delta, as described earlier, there's very deep knowledge and understanding of the oil and gas sector. So it's very easy to actually locate experts for a lot of the work we're doing for this. So we're working very closely with the community in identifying contractors that help with this. And beyond that, we are also working with the sort of young professionals in the community to sort of get internship placement. So it's broad, it's across board.
Excellent. Okay, thank you for fielding the questions, gentlemen. I appreciate it. And Sam, I'll pass it back over to you.
Okay. Well, Al, thanks a lot for leading the panel discussion. I have no other questions. You did a great job there, and thanks for answering in such detail. Great questions, guys. This is no doubt, two of our favorite picks of Sterling. And guys, thanks again. I guess I'll give it back to Raj. Thanks for putting this together, Raj. Tell us how to get in touch with the guys. So I guess everyone can see on the screen right here to get in touch with Deklar. You've got their contact info. Wade and Lloyd from TraceSafe, you got that there as well. So I guess this is Sam Gurr signing out. Thanks again, guys. It's a pleasure to have you here.
Are you? Everybody still there? I'm sorry about that. That's never happened before. Thank you, guys. Thank you all, the presenters. Thank you very much to Alan Turner of MEG, who I seem to have bumped off here. Thank you to Sam, Sterling Merchant Capital, for making this possible. Thank you to all the attendees. Also, thank you for your time today. Do go to the company websites, which you can see just up here, and go to CEDAR, learn more about these companies. Also, check in at TakeStockLive.com, where you'll have access to their decks and in due course a recording of this whole session. And until next Wednesday, 15 minutes after market close, be determined in your due diligence and ask tough questions. TakeStock Live signing out. Thank you again, all.
Thanks,
Thank
guys.
you. Bye.
Thanks, guys.